Hello, everybody. Welcome. This is Tesla Today. And today we have a special guest. It's Randy Kirk. Randy has been with me. Everything okay, Randy?
Sorry.
Randy's been with me several times. He's an author of 2 Elon Musk books, and he's got his YouTube channel. He's been doing quite a number of shows. So thank you very much. Welcome, Randy, for filling in today.
Absolutely happy to be here. Sorry, after we had 15 minutes in the green room and I still hadn't set up my studio here.
Okay, I'll give you 6 seconds to do that. Okay, you better be set. Perfect. Okay, so we have big topics. Of course, we need to hear your evaluation of what happened with the production delivery numbers that came out this weekend. You're very, very bullish, despite the short-term price movements that we'll discuss. You're going to share your thinking about, I think some blockbuster comments or analysis you've done with regards to the margin that you're expecting in first quarter. The second other topic we'll talk about today is insurance, which is a topic you've been very interested in. And there's some report that came out about it as well, Tesla insurance. So let's get started with that. So this weekend, a lot of people already in this channel have been watching this, so don't necessarily need to repeat all this. But this weekend, first quarter 2023, they reported their production delivery numbers. And so the production was 440,000 and the deliveries was 422,000 for the first quarter. And this was the breakdown between Model S and Model X versus 3 and Y. And then, of course, there was a huge discrepancy between the X, S, and X, between 19,000 versus 10,000. And they said that it's a transition towards a more even regional mix of vehicle builds, and it was in transit to Europe and Asia, the other Asian countries outside of China. So what was your reaction when you saw this?
So my first reaction when I saw it was, yeah, not bad. I had estimated 435 on both. And by the way, I think that the estimations, if I asked my almost 13-year-old granddaughter for her opinion, she would probably, come as close as anybody else if she spent a few minutes. Because where are we getting these numbers? We're getting these numbers. I mean, except for Troy, who goes into great detail. Most people are just kind of looking at what Tesla says and whatever reporting there is. And if you say 435 or you say 436, 512, I think it's pretty much just pulling out of thin air. So I guessed 435, give or take. And, I was relatively right, except for that big situation with the 10,000 S's and X's that I didn't know and nobody else apparently knew were in transit all over the world, therefore could not be counted as sold. So pretty much, I think it was a great result. If those 10,000 flow through in quarter two, we won't know that for a number of weeks, 13 weeks, but we will eventually find out whether those flowed through. If they flowed through, then first quarter was amazing.
Mm-hmm. Yep. I felt the same way. I mean, obviously, I think that I was very, very happy with the production numbers. 440, thought it was a great number. And, many of us in the retail were overly optimistic. We're hoping that we'd really beat the 420 number. And so we ourselves created that expectation. But I think as we go through what the analysts are saying, it's actually muted. They're not negative. Things are looking good, but I do want to hear both your short-term view, what's happening. And I know both you and I don't really worry about that so much, as we're very, very bullish about what's going to happen in the next months and years, but we do need to kind of explore that. So let's take a look at this one, which is, a nice chart. What's his name? Roland Pichot. Yeah, I didn't get his tweet out. Sorry, Roland, but he nice charts here, and he shows this is what it has been over the years, right? Every quarter, this is by quarter, and the yellow is production, and the red is deliveries, and the inventory is the green line, right?
Yep.
And looks great when you look at it from here. It's like tiny little changes, really. At the end of the day, it's not bad. And this is the first quarter, right? I mean, traditionally lower expectations on first quarters.
Right. Yeah, no, there's no question. Again, I consider the numbers to be fantastic. We had the regular China shutdowns as well as a little extra shutdowns. I thought going into the quarter, I was a tad nervous that that some of the rumors were true, that they were going to start shorting production. But as we got into the quarter, Elon and others said, no, we're full out. We're going 100% out. We're gonna make as many as we can, and then they'll do what they have to sell them. I'm a little I will admit once again to being a little nervous. I see them adding 100,000 cars this next quarter, or close to 90 to 100,000 additional. So going to 540, 530, somewhere in that range in terms of production. Well, that's 90 to 100,000 more cars you have to sell. So that could be a little bit nerve wracking in terms of getting there, but we don't know what's going to happen to the Y. We've never seen the Y be available in this much abundance. So once it's available, people may snap them up. We'll have to see what happens. And then will Tesla have to pull any demand levers? Will they have to lower some costs, lower some prices? I mean, maybe. Will they have to advertise? That's a thought. Will they have to come up with some great leases on Model Ys? Right now, they're doing some great leases on Model 3s. Maybe they'll have to come up with some great leases on Model Ys. I think that is my number one preferred demand lever, is to have a $399 Model Y lease. I think people would go.
So you're actually thinking that they're not going to be able to just sell everything that they made Model Ys, which is I don't think we're there yet. Every Model Y that they build in the next several quarters will be sold. That's not an issue for me. And although I have been saying that I think that a price cut is perfectly fine. They should price cut if they needed to, but I think the Model Y is not the issue. But you think so?
Again,
every quarter as they increase the sales or increase the production. Yeah.
So you're increasing about 30,000 Model Ys per month over your previous capabilities. So you do that month after month after month. We don't know. Nobody knows if there's going to be at some point some demand resistance, and Tesla seems quite prepared to lower the price to get there. And they showed with the Model 3 that they'll also do this really, really good lease. And by the way, I did some analysis on that leasing versus selling. Tesla makes out like a bandit if they do these low price leases. So there's no reason not to do it. It's really a better long-term for the bottom line.
Yeah. And then just a recent data that came out of China. I don't know if you saw this, but January to March, the number one selling car in China, and you're comparing it against all cars, all competitors in China, even the gas cars, it's the Model Y by a huge margin at the prices that they're selling it now.
Right.
Okay.
Yeah. So
and
again, one could assume, oh, great. The more they make, the more they'll sell. I am a bull, but I'm also a marketing guy. That's what I've done my whole life. I've been selling products my entire life. And you never know, as you add more quantities, there could be a point.
Yeah, for sure. But you've never marketed, with due respect, a Tesla product.
It has not happened.
How incredible it is, and how, we'll see, right? We'll see. Okay, let's, I know we don't like to do this, but let's go ahead and address the elephant in the room, which is the stock fell. This was at 11:18 this morning, Pacific time. Still got 2 hours to go in
now
the market here, but it fell quite a bit.
That's my Randy index. Okay, I may have to patent it or something, or trademark it.
Okay,
but this is the Randy index. Okay, and this is what I have on my phone. So I have Tesla, and then you'll see all these ones below it are all ARK investment companies, the things that they like to invest in. So these are growth companies, 5-year trend companies, go companies, but also seen by the investing world as being a little bit risky. Now, why Tesla is still in the risky category, I have no idea. I've been talking about that for weeks. They should now be seen as a blue chip. They should be. They're still growth, and they're blue chip too. But if you look at that chart, you can see on Monday the charts are all the same. Okay. Now that was Friday.
Okay.
Friday.
This is Friday.
Everybody's like, "Oh, Tesla went up so much on Friday." Look at my
Mhm.
list again. All of those companies went up, and they all went up in roughly like 4 or 5%, just like Tesla went up 6%. So this is more indicative of where Tesla has been trading for months now. They've been trading with the macro, but they've been really trading with this group of growth stocks. And so you can almost predict, and that thing is commonly based on bonds. And what are bonds reflecting? Inflation.
Mhm.
So these risky stocks potentially are going to need funding. They're going to need to borrow. And so the bond market is indicating what they're going to have to borrow at. And when you're a risk company and you might run out of money, that can be a problem. So they go down when the bond, when the what do you call it? When bonds go down and the interest rate on the bonds goes up, then these stocks tend to go down. So on Friday, everybody was like, yeah, this inflation thing is over, everything's good. And so
Mhm.
all of those stocks went crazy along with Tesla. Then over the weekend, oil price, the OPEC nations decided that they were going to reduce the barrels per day by over 1 million barrels a day of production. And so what does that do? Well, that drives the price of oil up to now over $80 to $81 last time I looked. And that typically means that the bond yields are going to go up because they're going to fear inflation, because oil has the biggest impact on inflation. So I'm saying Friday had nothing to do with people anticipating a beat on the production.
What?
That's right.
Okay.
That's what those two charts show you.
Mhm.
Tesla was responding to inflation and bond prices, just like the rest of those stocks were. And on Monday, it's responding to inflation and bond prices, just like the rest of those stocks were.
Okay. Yeah, I can believe that. I think that people weren't. I think they're neutral both days. Yeah,
Yep.
before the Q1 P and D, and then after. Even now, I think that it's fairly neutral. Even though we definitely saw the drop,
Yeah.
but it could just be because it's a beta stock.
Yeah.
Interesting.
And I'm not saying, and Herbert, I'm not saying 100%. There could have been some play, going into the weekend for a beat. Some people putting a little risk on Friday. I'm just saying overall, it's way. I've been watching this now for at least 3 to 4 years of this pattern of Tesla going right along with that set of stocks, going right along with the ARK stocks. And it's just almost always, you can just see exactly the same pattern.
Okay. So let's continue. I mean, this conversation about what's happening in the market is obviously there's a lot of Twitter back and forth that's happening right now. And this is far as that going, Tesla's growing quarter over quarter over quarter, while the rest of the auto market is shrinking quarter over quarter. And then so, why are there anybody even hinting that Tesla's in trouble? He's confused. And Gary just says, things that we kind of know, but nice reminder, which is, well, the expectations are different because Tesla stock, the PE ratio is at 49 times. And the 2024 PE is 35 times versus Ford at 8 times, GM 6 times. So Tesla, what's that? And so if you want it to have the same growth expectations, then you can't have the same. You have to cede some of the PE multiple points, and that's why its stock falls, even if it doesn't show that it's growing as fast. Yeah.
Right. So again, the numbers, if anybody cared to look into them more than surface level, they would see that it was a huge beat because the street was actually expecting 421, and the real number, even though it was 423, if you take a look at the S and X situation, and if they do flow through, then you've got a really big beat. So I don't agree with Gary. I think that that an analyst would look deeper and they would say, oh my gosh, this looks like a really good thing going on here. And then you look out, what does this mean that they hit 440,000 in production, even though you had Shanghai down for almost 2 weeks? So what that means is, and with both Austin and Berlin ramping up nicely, with new statistics coming out even over the weekend on Austin, well, you got to add, again, 90,000 probably. Maybe it's only 80. I don't care. 80, 90,000 to the next quarter. Because you're going to get another 30 to 40,000 out of Austin, another 30 to 40,000 out of Berlin, and you're going to get 20,000 out of Shanghai that didn't get made because of the Chinese New Year and the
Right.
ramp.
Yeah.
So you got 30, you got 80, 90, maybe even 100,000 more cars going to be built and theoretically sold in the second quarter, and then you're going to do that again in the third quarter. Now, at that point, you're going to be almost up to your 500,000 in both Berlin and in Austin. But every expectation is they're going to continue the ramp into the fourth quarter. So you could be going at a higher than 500,000 a year run rate in both Berlin and Austin on Model Ys by the end of this year. So altogether, that puts me back in my 2.3 range, which is what I said months ago. And everybody's like, no, it's not going to happen. And I even backed off. I even backed off when Elon said 2 million is their hope for number. I backed off and said, well, maybe they're going to hold back on production, but they haven't. And they've even made statements that they're not holding back on production. So I'm confused. I cannot figure out any way that they don't get to 2.2. That's my absolute minimum number, unless they slam production. They have to stop making cars somewhere.
Yeah, absolutely. You're dead on right. So it's production seems like they're just screaming along. It's going to be quite nice with the production. And then the question about demand, I'm still not worried. Barring macro, things can still, obviously it's looking, negative again, sentiment. We're going to be talking a lot about that in our Cyber Bull show tomorrow. Some folks are forecasting there's going to be continued recession and so forth. But I'm okay with Tesla doing price cuts. And then, of course, now it's all margin. But we'll talk about that some more. So let's share a little bit of what the analysts are saying. And basically, from what I see here, the analysts are kind of neutral, if not okay and positive. So I'm going to walk you through each one of these, but this is Gary saying, here's what he heard from the analyst comments about this. So Citi was neutral. Let me see, we'll go up here. Yeah. So Citi was neutral. TW Cohen was market perform. They raised their price target. Jefferies says a buy, price target, and New Street Research. Now, it's good to hear what they're saying, but nothing really. When I read this, nothing really. There's no major surprises, except for the segment was lighter in the SNX. And given the stock's run up to the first quarter delivery, they expected that today was going to be a slight modest pullback on what likely will be regarded as an inline outcome. Okay, and that's what they said, which I think we all feel the same way. T.D. Cohen says excess production was due to more vehicles in transit. So at least they repeated that concept that it's because of, it's in transit to Europe and Asian Pacific. Jefferies says it's debate about price elasticity versus general demand weakness will persist as production keeps outpacing the deliveries. So they still focus on the production and deliveries. Then they said people will still be worried about that. And while Tesla reported record deliveries, it came in at the low end of the low end of that. So that's what they said. But then if you start looking at it from pulling back a bit, this is a great, fact that Sawyer tweeted out saying that, hey, if you look at 2020, what did they sell in all of 2020 compared to what they sold in just this first quarter? You're like 85% of what the Tesla sold in the entire year of 2020. And then many like to focus on the short term, quarter of quarter, but take a multi-year view. It's 4.8 times what it was 3 years ago.
Yeah, and if you take, I looking back is great. I like to look forward. So if you get
nice,
if you get to 2.2 million this year from 1.3 last year, you got almost a million additional vehicles, and you got over your 50% increase. Then next year in 2024, I don't see how they don't add another million. So you'll go from 3.2 to 4.2. You're going to add at least a million, probably more than a million the following year, because you're going to add CyberTruck plus more Model Ys. in both facilities. I just don't see where the slowdown is going to take place. So long term, again, that's on the production side. They've got the production in place. They're going to open up Mexico. That's going to start 2025 production. You're adding in CyberTruck, and nobody talks about semi-truck. Semi-truck, I just love to remind people over and over and over again, if Elon hits his numbers in 2024, he's talking about 50,000 Cybertrucks, which if they sell for 300,000 a piece, which I think they will, and maybe more, but there's no reason why they shouldn't sell them for 300,000 a piece, is $60 billion in sales. Always the powers of 10, right? It's always going to So $60 billion in sales, that's the equivalent of where we are right now in Berlin on Model Ys.
Wow.
Okay.
Nice way to put that.
So if people are not paying attention to the semi-truck is eventually going to be one of the biggest divisions of the company. It'll be as big, almost as big as auto.
Yeah. Sorry, you said the semi. You were talking about the Cybertruck. Now
the semi-truck will eventually be as big as the entire auto and light truck division.
Yeah, you've got a full analysis on a Tesla Semi. We've done a video on that. So let's continue this quarterly report. But when you look at James Stevenson, he did this kind of a tweet out. This is his chart, and he's showing that if you look at the exponential growth, it's always a great way to look at things. Look at this now. We're here. So it is exponential. So it's okay what's happening quarter to quarter. This is Morgan Stanley analyst Adam Jonas, and they just put this out today, and they're saying that they are still estimating Tesla to deliver 2 million vehicles this year. So that's in line with what you're saying, 2.2. We believe Tesla and its EV competition may require further price cuts. So they said that last note as well, to achieve the higher end of consensus volume expectations this year. So this is the way it broke down in terms of what they're thinking. Inventory and annualized numbers. Inventory, let's talk about that. Tesla ended fourth quarter with 13 days supply of inventory. In the first quarter, Tesla produced 18,000 more units than they delivered, which would be 15 or 16 days. Still low by auto industry standards and the highest for Tesla. But again, it's like Tesla does not have dealers who fake buy things and hold on to it, right? What's your comment on inventory?
Yeah, so this is a very, I have to give tons of credit to Steve and Mark Ryan. I think was one of the very first to point this out. It might have been Rob Maurer, but one of those two were the first to talk about it. I talk about it all the time now. As a manufacturer and a wholesaler my whole life, importer, distributor, if you grow your business, you have to grow your inventory. There's just no way around it.
Exactly.
You cannot not do that. So there's no question that the right metric, the right key performance indicator, the right metric here is days of inventory. And that's what the automobile industry has used forever. And it's even more appropriate in the case of Tesla because they sell consumer direct. So the 13 to 16 range is amazing. Everybody should have that level of inventory. I've never had the joy in any of my businesses of being able to get 24 turns a year on my inventory. That's just crazy. So I think this is exciting for them. Yes. Would I like to see it stay around that 15 range of days of inventory? Yes. I think that'd be great. If it goes up dramatically from there, it would be a reason to throw up the caution flag. But I'm perfectly happy. So for listeners who are paying a lot of attention, the days of inventory is the right metric.
It is. And tomorrow at our Cyberbills show at 1:00, Jeff Lutz is going to do a supply chain 101. He's going to teach us everything about everything you just said. And this guy knows his stuff, just like you. You've got experience in this manufacturing distribution. You had a business doing this. And same with Jeff, that he was in charge of mobile phones, Motorola and others, that, he understands how factories produce and the inventory, and he'll explain it all to us. And he's just frustrated because people are just they don't know what they're talking about and they're spitting things out. So he'll teach us all about that. So the other thing is the annualized numbers. And so like we just said today, I don't know if anybody who doubts that Tesla is going to be able to produce significant amounts, if not even over 2 million. So this is Adam Jonas, and their estimates is that if you already take the first quarter production and you analyze it, we're already at 1.76 million units. There's going to be further ramp of Berlin and Austin. Both are 4 units per. Didn't we just hear that Berlin's already at 5,000 units per week?
There, yeah, Berlin's at 5 and Austin's at 4.
Okay, yeah. So that's wrong, and then could collectively add 100,000 to 200,000 units to the first quarter annualized rate. I saw this one graph that said that they expect Berlin to be at 10,000 units per week by September.
Yes.
And Brian White from his YouTube channel, My Tesla Weekend, he follows this very, very closely. And he told me on Friday that he actually absolutely agrees that is absolutely the right, like very likely path. And so, we're going to see incremental output at Shanghai and Fremont. This will get us to the 2 million units achievable. Now the question is price and margin.
But again, if you take that, again, we talked about it a few minutes ago, but if you just take what you just said, there's no way they don't do 2.2. It's impossible unless you decide to shut down Shanghai for another 3 weeks or something. I mean, you'd have to purposely reduce your capability in order to get under 2.2.
Yep. Okay. So we'll see. Some people, Jay Kim says it's a pipe dream. We don't think it's a pipe dream, but let's keep moving forward. So that's inventory and annualized numbers. Now the question is, how are they going to get the sales, the deliveries? So more price cuts needed. First quarter deliveries increased 4.3% on a sequential basis, despite continually high production capacity, substantial price cuts, and pent-up demand release related to incentives. Given a slowing economic environment, increased pressure on financial institutions willing to lend, and competition, BYD, we believe Tesla and its EV competition may require further price cuts. And as we've written for some time, we believe it's Tesla's objective to go ahead and lever their cost advantages in the form of lower prices. So they're going to do more price cuts.
Yeah. So first of all, we have to start with what Tesla's real objectives are. So Tesla's real objectives are to take out ICE competition. I don't think they have any objective to destroy any BEV competition. So I think they're probably thrilled to death. If you were sitting over a beer with Elon, he would be very happy that BYD is doing as well as they are. I've talked about IKEA. I think IKEA and Hyundai IKEA is another one that's going to do really well. And I think they'll be applauded for doing really well. So we need lots and lots and lots of BEVs, lots of them. Tesla cannot make all the BEVs that will be demanded, 3 years from now when the worldwide slope starts to look like the Netherlands. Then there's going to be this massive demand that it will be almost impossible for all of the car companies together to fulfill. Right. So short term, this year and next year, before that curve starts to hit its full acceleration, I could see month to month, quarter to quarter, depending on the macro, depending on the economy, there could be times when Elon might have to say, hey, we need to cut prices in order to make these numbers. I've stated already publicly, so I will restate it now. I think that there will be possibly small price cuts here and there. I look for price increases. I look for small $500 and $1,000 price increases, just like they did in the first quarter. I think you'll see more of those region by region, product by product, in order to maximize the profits from the cars going into this year.
Yeah. And we've already shown price elasticity, right? So even just a small price cut is going to be massive market or opportunity opening up. And one topic that I covered recently with Amy on a Thursday show was she was showing the pricing. Tesla's pricing strategy is unique in that they're very variable, and they'll just change the prices day by day, week by week, region by region that you're talking about, as opposed to other car manufacturers who basically set one price, and then that's what they sell, and then the dealers decide if they're gonna, how much they're gonna change it by, whatever they do, but they like to stay with one price. but because they're selling it to the dealers, right? So
Sure.
in our case, Tesla is able to do this, and so they're able to really just change it whenever they
Yep.
need to. Okay, and then so the question is margins. So I'm curious what you think about it. And so Jonas thinks that their forecast is 20.5%. It's still they're going to be able to hit that. We've heard Tesla management say that they're still going to hit over 20% each quarter this year. So what's your estimate of that?
Yeah, I think this is going to be the biggest shock of the year. I think this is what's going to drive the price of Tesla stock up over 300 after the first quarter meeting, the first quarter earnings report. There's a bunch of reasons why. So bear me out for just a second. Number one, what do we just say? Which car is it that they're selling the most of and selling lots more of and going to sell more and more of? Model Y.
Model
right?
Y.
Model Y.
Yeah.
Okay.
Yeah.
Okay. So do we remember something about Tesla saying that Model Y's margins, that their cost of making the Model Y was actually less than their cost of making the Model 3? Do we remember?
Right.
Do we remember Tesla saying something about the fact that since they're making them in Berlin and Austin now, they're using all the most modern factory decisions that they've been able to make, all the ways of reducing the cost of making Model Y. So therefore, if we're going to make another 100,000 of something in the second quarter, I think it'd be great to make another 100,000 Model Ys because they're the ones where we have massive margins compared to the Model 3. And so I would certainly think that would be the wise thing to do. Make lots of Model Ys if you can sell them all. So you have this margin advantage on the Model Y that is not being taken into consideration as the ramp continues. And the further they ramp, the lower the costs get. Okay. Number two, what did Elon tell us to watch for? Not Elon, it was actually
operating margin. Yeah.
Operating margin, right? They told us to watch the operating margin. So I think if we keep the operating margin in the 17 to 20% range, I think the street would be very happy with that. So how do we keep the operating margin within 17 to 30%? Number one, Zach told us that he's concentrating like this on keeping the overall overhead down. So that's a big one. So you keep the overall overhead down and you increase your revenues, you're going to end up having higher operating margins. Number two is that you're going to have the new income coming in from Lathrop. So the income coming in from Lathrop at high margins is going to affect income, which will increase overall operating margins. And then you have those profits coming in, which nobody's counting. And so that's going to increase overall operating margins even more. So most people are predicting those margins are going to be in the 40 to 50% range. So that's huge. It's going to have a huge impact. I think it will be at least $2 billion in revenues and at least $1 billion in profits from Lathrop. So it's going to have a big impact on the totals during the first quarter that nobody's expecting. And then number five, all of the other divisions, with maybe the exception of solar, so insurance and superchargers and everything else that Tesla does, all of those are increasing revenues and nobody's paying any attention. And all of those will be getting more and more profitable and nobody's paying any attention. So those are going to be adding to the operating margin. Nobody's going to pay any attention to what they actually make individually. Oh, superchargers made, an extra 200 million. No, nobody's going to care about that on the street. But what they will notice is that the overall operating margin stayed in that 17 to 20% range.
Wow. Okay. Let's back up. Because you started off and I was going to make you repeat it, but you said you believe you're a bull, but you're saying you expect that the Tesla stock price is going to be at $300 after the Q1 earnings. And the reason, and you better walk me through this again, is because you're expecting a kind of a shock margin higher than people are expecting.
If we start with the Model Y, and which is going to be the vast majority of all the cars they sell, I mean, it's not even going to be close. They're going to be selling over 1 million Model Ys, way over 1 million, like 1.4 million. Model Ys compared to everything else they're going to be doing. It might even be higher than that. I forget the number now. I'd have to go back and look that up. How many Model Ys did they sell in the first quarter? We just had that up.
Yeah, we did. Yeah. Model Y. Well, Model 3, Model Y was 412.
That's right.
412.
Yeah. So anyway, they're going to sell at least, like 1.4 million Model Ys. Anyway, the overall trajectory is Model Ys where they have the most margins.
Yes.
As a result of that, I'm saying that automotive margins will come in way closer to 25 than 20.
Okay.
So I'm estimating 23, 24 is roughly where I think it's going to come in.
Okay. And then if that happens, you think that that's enough of a beat on expectations? Because right now people are still kind of concerned because of price cuts, and they're thinking that they're needing to reduce, even do more price cuts. And so everybody's like in pins and needles right now, waiting for the margin, because they did massive price cuts in Q1, January, and nobody knows.
Oh, and I did forget one other thing. Because they've done the price cuts, and because we now have the Inflation Reduction Act stuff, the IRA money, people are likely to be bouncing into the higher value cars. So if they were thinking about buying a standard range, they might buy a long range. If they were thinking about, so if they weren't thinking about a plaid, maybe they're thinking about a plaid. So overall, I would expect an increase. If they were thinking about a Model 3, they probably are buying a Model Y. We've already seen.
You think this happened during the first 3 months of this quarter?
I think
you think it's already happened?
Yes, I think
it's going to increase, but
yes, I think it's already happened. Yes. So that's also going to increase revenues, and it's also going to increase margins, because the higher priced cars make more margin. Yeah. So that's why I'm saying 23 is my number. 24 is where I come down, but that's just the automotive margin. The operating margin is even more important, and that's going to be a big beat. Nobody's expecting 17 or higher on operating margin.
Okay, so you're still saying, again, give me your time frame. You're still thinking
after the meeting, the
Q1 earnings, which is April 19th.
April 19th. Then the march will start. It won't be like, it won't go from 220 to 300 in one day, but it'll start going up and down towards 300. After the second quarter, when Lathrop really comes in with their numbers, and when we have proof that they can sell all the cars that they're making, now we'll start making the march towards 400, which is my number for.
Yeah. I've been waiting for the day when Tesla will be not seen as a car company anymore, and they can actually see a line item for energy, and they can quantify it, and they can start guessing and forecasting that you think will happen in the second quarter, right? Because after the second quarter earnings report, then they can truly show the huge jump from what it was fourth quarter, first quarter, and then fourth quarter first, and then second.
Right. Yes, I think Lathrop will have a big impact by then. Plus, there will probably have been announcements that Shanghai and maybe one other place will be building mega factories. So that'll also have an impact. So if they're looking at the numbers already being $1 billion $1 billion a quarter in profits, and then there's announcements that have been made about additional mega factories, then that should get people to start doing what you're asking, which is to say, oh, well, maybe they're an energy company too. Although Elon has already skipped ahead, you know what the company is now, right? It's an AI company.
A robot company? Robotics. Yeah, of course. And we've heard your estimates of that and more. And the fun, you said it, I'll give you credit. You were bold enough to say that you expected Tesla to have 1,000 robots by the end of this year. And then you're kind of alone on your own estimate of that. But as the last 2 weeks, 3 weeks had been happening, more and more people are agreeing and believing that that is possibly the case. And the most recent one, I think I sent you the tweet for this, right? Somebody showed it to us, which is the CIO, the top IT person or AI person at OpenAI. He was being interviewed.
Ilya, some last name I can't pronounce. Yeah.
And he was interviewed, and he himself said that Tesla is way ahead, that they decided not to go into this, although they'll partner with other robot companies, and that in order to do it is because you need to really be committed, and that he said 1,000, tens of thousands of bots needed to be able to teach it.
Tens of thousands, hundreds of thousands. Yeah.
Yeah, he said that. So that's why it kind of bolsters the idea that Tesla will likely go faster than we realize. Yes, and then they're already showing that this thing's already walking up and down. As they're doing just fine. So they've already kind of almost show the production of it. Okay.
Well, so if you want to make news today, I know Randy Kirk doesn't really make news, but I mean, you're right that I've been right over and over and over again, right on Lathrop, right on robots. So my new thing on robots is the reveal will happen before the end of the year, and they'll start taking orders.
Yeah. No. Yeah. Yeah. Okay. All right. So I was confused a little bit for a second here of where I'm going. Okay. So you're 300 with your price target. You think that it's on its way. Yeah, I had a thought about the energy again, but so you believe that they're going to surprise in the margins because of energy. It's going to happen in first quarter, Q1,
because of energy and because auto will be way higher than they expect.
Gotcha. Yeah. Okay. And this is regardless of the price cuts that already happened. Your calculations show that, right?
Yeah, and there's one more element there too. A lot of people were also nervous about the price cut reducing the average selling cost, right. And so some people were thinking it might drop as low as 40,000 because people do back of the napkin math and they go, well, they were averaging 50,000, they dropped the price 20,000, so therefore it's 40,000. Well, yeah, but if you start again analyzing it in detail. No, most of the new cars that are going to be sold are going to be Model Ys. So that's going to increase the average cost of vehicle. They're probably going to be upgrading themselves into better vehicles. So that's going to increase the total cost of vehicles. And they're going to, and they will start making these adjustments in the prices. I believe this is not a fact, but I believe they will, which will increase the average cost of vehicles. So the average cost of vehicles will be higher. The average margins will be higher. The average operating margins will already be higher just on automotive, and then you throw in energy.
All right. Well, let's keep this quiet. We don't want anybody to raise expectations. Yeah, we want the expectations to be low, and we want to be surprised. But you're giving us some potential that there might be a surprise. Who knows, right? Might be a surprise. Okay. So just some the reason I'm bringing this topic up is because, again, you have been very, very vocal about Tesla insurance. You've evaluated it. And there's a really, really long analysis by this guy named Fallacy Alarm. I haven't read it yet. It was quite a long article explaining about how Tesla insurance compares against all the other insurance companies like Allstate and Progressive. And basically, he's saying that Tesla insurance can contribute $1 to $2 of earnings per share 45 years down the road. Standalone, it would be worth $80 billion. And Sawyer read it, and he said that it's going to be because Tesla insurance is going to be double that of Allstate and Progressive, contributing billions in revenue annually, becoming an up to $80 billion business in the next 5 years. Pretty big. So Progressive is currently trading at a market cap of $83 billion. Allstate is at $28 billion. So Tesla has a shot to recreate an insurance carrier with the size of a Progressive or an Allstate within the coming 4 to 5 years. This is within his write-up. This is his conclusion.
Right.
It'll be an additional pillar to the earnings growth story. And what's funny is that you actually, you and I will be doing a video, and you actually consider insurance as like the 6 that are not that big of a deal yet. There's 5 big businesses.
Yeah, 5 big
insurance
5 big divisions. I call them the pillars. And then the 6 divisions that, if they were standalone businesses, they'd be worth billions and billions and billions of dollars. But as part of Tesla, this $1 a share, $2 a share, 5 years from now, it's insignificant. It's inconsequential. It's a rounding error. So yes, it was a great business. Progressive. How much is Progressive worth on the market today? I don't even know.
Yeah, it's huge. Yeah, well, he had it. He showed it. Yeah.
So it might be worth $80 billion 5 years from now. $80 billion 5 years from now, the company's going to be worth probably
3 trillion. It's a rounding error.
rounding error. So
Okay.
that's why I keep telling. That's why I started this also. This is another one of my things that I started 4 months ago. Spin them off.
Yes, I know.
Spin off the supercharger business. Spin off
Yeah,
the
yeah.
insurance business. No, turn them into stock dividends for the stockholders. Yep, absolutely.
Yep, I know you've made that statement. We need to dive into that a little bit more, but you've made the statement that you think that Tesla's not market cap is not taking advantage of all the potential business in it because of just the way like GE is. When you're a conglomerate, people ignore your value. But if you spin them off, and there's ways that Tesla investors, shareholders will benefit when they spin off these things. You know, you have to get into Elon's mind and thinking at one point he was debating whether to do X.com, which is like all the businesses go into one, let alone what you're saying, which is time to break up Tesla into multiple segments. So who knows what's going to happen there? Okay. And then, we also over the weekend, one of the things that we were looking at was this, Tesla China was kind of teasing this thing under a cloth, and it turns out to be CyberVault, and that's what it is. So it basically turned out to be a charging station, and he said that this guy Yan Chang said he's proud to be one of the first people to try CyberVault for Chinese users. It's the best solution to protect the storage of chargers, and it can be used as a travel charger. So this is what it looks like. Looks just like a Cybervan design. Looks actually great, but all it is actually just a storage unit, and you keep your stuff. So that it says here regarding the Chinese charger with a external charging gun holder. In China, most people don't have garages, so just dedicated parking spots. So to avoid people stealing electricity, we often put our chargers into cabinets. And so they just created a cabinet. So this could be something like, people putting it out in their driveway outside instead of the garage, and they have this beautiful storage box for it.
Yeah, but even inside your garage, I mean, sure, lots of people don't care what the inside of the garage looks like, but I know lots of folks that their inside of their garage is almost as beautiful as the inside of their home. I have carpet in my garage. So, it's, I have a Tesla in there. I have to have carpet on the ground. Anyway,
what?
So
okay.
I have carpet. Yeah, my garage is carpeted.
You're weird. Okay, sorry. Yes, I guess you should take that as a compliment, right? You're not, you don't just follow what other people do. You'll do what you want to do.
Definitely take it as a compliment. Okay.
So you put carpet in your garage. Okay.
I have carpet in my garage. Yeah. It's Berber. It's Berber. It's, it's like industrial carpet. Okay. Anyway, but yeah, putting that thing in your garage. Yeah. I think I can absolutely see folks that own a Tesla putting that in their garage. I mean, right now we've got the cord draped over something, it looks ridiculous. Yes. So I can definitely see a little cabinet like that would be fun. And my wife wants a CyberTruck when they come out. So the CyberTruck could be sitting right there next to its cyber storage unit.
All right, let's answer a couple questions here. So first of all, this came much earlier. How is Tesla breaking records and the share price not reflect that? That's what we do every day in the story.
I did try to just explain that. I've done a lot of videos on this. So I love this question. Every stock is a story stock, but some stocks are even more story stocks than others. So I don't care what business you're in, there's got to be a story associated with it for people, a narrative that people have in their head about investing or not investing. Okay. Every stock, every company. Okay. But some companies are all about the story. They're all about the narrative. So in Tesla's case, that is definitely true. So you have a narrative on Tesla going into the end of last year. They are breaking records. They are slamming it with, profits now. They can hardly do any wrong. And then all of a sudden, the overall market changes, and then Tesla misses in the fourth quarter. All of a sudden, the story changed, and so you saw them following all the ARK investment stocks, just like I just pointed out. It followed them down to the 70%, 80% off of their highs. Because why? They were a story stock and they went all the way up here. So when the fall came, the fall was large. if they had not been up at a billion, 1.2 trillion in value, if they'd only been valued at 800 billion, well, then the fall would have been way less as a percentage. But they are a story stock. So they went crazy, and then the fall is always going to be as crazy. What we need now is we need the investing community to understand that the story has changed. This company is no longer in any risk. There's no risk. They have $20+ billion in the bank with no debt. Yeah. And they're just going to be throwing off more and more capital, and they're building more capacity all over the world at record-breaking speeds. So it's no longer the story of a growth company that's also risky like ARK stocks. It is a growth company that is a blue chip. And the S&P has now joined Moody's in calling it such. So that narrative changes, then it's going to change. It means that Tesla will not go as crazy when it's running up, but it also won't go down as badly when it's going down. So that'll probably mean less people will, it will cause a reduction in the number of people that are buying the options. Because the options, I'm an option player. I love options. The options market loves swing stocks. They love stocks that are all over the place, because then you can multiply your, you can manage your risk in such a way as that you can make a lot of money if you're smart on options.
I don't agree. Okay, well, let's not talk there right now, but
it is. But if it's only,
I can argue with you about that one. Yeah, that's a bet. Well, that brings me to this comment, which is, Randy Kirk's a great guy, but so bullish among the bullish. Thank you, Michelle. Do you consider yourself the most bullish among the bullish?
So my goal in everything that I do with regard to Tesla is I listen to Elon, I listen to Zach, I listen to all the other guys at Tesla. I try to listen to as many pundits as I can, folks like you and the whole list, the people that you bring on your show. I try to listen to as many as I can. I read as much as I can about the guys that are not doing YouTube videos, and then I analyze. And that's what I've done my whole life. Basically, at my core, besides being a sales and marketing guy, I'm an analyst. I love spreadsheets. And so I throw the stuff on a spreadsheet. But I'm really, really bad at the risk side. I'm really good at seeing the potential. And my entire career, I've been really bad at seeing the risk side. So I think I am an optimist, and I'm seen as an optimist. I'm seen as a bull because I don't naturally see the risks. Yeah. But the numbers are based on information that is readily available to everybody.
Yeah.
Everything I said today, either Elon said it, Zach said it, somebody said it, that makes sense.
Okay. I love the way that you just said that, because that's exactly my philosophy as well. And so I want to repeat a little bit of it, because I think it's important to what you just said, right? Which is, you can see the positive of what this company's doing. You can calculate it very clearly, the electric vehicle market growth, the energy growth, the semi, the robots, all of that. They will happen. And because you've got a company like Tesla is no longer at risk, has got tremendous amount of cash, has proven over 12 years that they can innovate and they can accomplish things. And it's just a question of timing of when that will happen. And so then there are risks, and the risks are like the macro comes in, that is outside of Tesla's control. And so that slows it down a little bit. And as soon as the market sees that this company is doesn't just for this quarter or that quarter or this, because of macro, there's a little bit of a drop. They go, oh my God, there's no longer a growth story. I'm going to jump out. But the reality is nothing has changed. Tesla's still knocking it out of the park. They're still creating those products. Like we just said at the beginning of the show, none of us, few people are worried that they will hit the 1.8 million cars by the end of this year. In fact, many people think it's going to be 2. And a few are thinking, well, if you calculate out the, production wise, in terms of the factories, 2.2 is going to be just fine. And they're showing that they have the ability to do that production. The question is deliveries, but it's mostly because of macro, not because of the demand for electric vehicles or the demand for Tesla cars and how the price points are going to be reduced. So that stuff happens, but when those risks happen, it's temporary. When they come away, when they fall away, the stories again still here because as a company, still very good. Okay. Sorry, but I think that's what I wrapped everything up from everything you just said. So
I think you did an outstanding job.
You did an outstanding job. Okay. Well, thank you so much, everybody. Appreciate this. And Randy's awesome. He's got his own YouTube channel, Randy Kirk. He's got his Twitter account, Randy Kirk1. And we're going to be doing more one-on-one interviews as well. So thanks, everybody. See you guys next time. Appreciate you guys.